Hello, everybody. Can you hear me okay? Excellent. Okay. For those of you that don't know me, my name is Simon Dixon. I'm the CEO of banktothefuture.com. A little bit of background before I go through some of the 5 investment waves that I've experienced in this market. It's pretty cool doing this in a round way. I don't know which way to face, but I'll keep moving. I was working in investment banking. I did 3 years as a trader and 1 year doing IPOs. And in 2006, I decided to leave my job to focus on a very geeky subject that no one cared about, which was systemic risk in banking. I gave presentations all around the world on problems with banking, wrote a book on the subject that was really boring about how the governments need to change things. But one really good thing came from that, and that was that I was invited by one of the very first early Bitcoin developers to speak at the very first Bitcoin conference in the world. And that conference was held in Prague, and there was about 30 people in the room. 20 of them were computer scientists, and 10 of them were hardcore anarchists that wanted to take down the government using Bitcoin. I bought my first Bitcoin there. My first Bitcoin cost me $3. And what I'm going to talk to you about today is some of the investments and the trends that I've seen since giving that first talk in early 2011. Here's where the market is. One thing I'd like to tell you, ever since that talk in 2011, my job at the talk was to discuss the difference between Bitcoin and banking. Now, the reason I got involved in Bitcoin was as a hedge against bank deposits. Because I knew quite a lot about banking and I looked into really geeky subject on banking, I believed that I needed a hedge against the financial system. And so in 2011, it was very unclear whether this would succeed. But it was one of the most interesting things I'd seen. And I'll give you just a very brief overview of the 3 things that I discussed at that very first talk at the very first Bitcoin conference in the world. The first was so that everyone understands the value proposition of Bitcoin and why it is reaching 15,000 today. Is the first thing you need to understand is that when you deposit your money at a bank, the bank becomes the legal owner of that money. Most people think that they own their bank deposits, but you'll soon start to realize when you land in another country that your government doesn't like you to go to, that you don't own that money, and you need to ring the bank and you need to get permission to access the money that you thought was yours. When you try and send over $1 million over online banking, you realize that the bank on the other side needs to know what you're doing with that money. The bank on your side needs to know what you're doing with that money. And if they don't like it, then they have the right to seize it and not make that transfer. It's because legally, by contract, it is not your money. When you deposit it with a bank, the bank becomes the legal owner. If you don't believe that, which it took most people to understand Bitcoin to actually really appreciate that, then ask the people in Cyprus what happened when the bank took too much risk with that money. It was seized and it was used to recapitalize the bank. The only reason they are allowed to do that is because it's not your money if it's at a bank. That was the first thing. So when I saw Bitcoin for the first time, I was discovered that this gave you, just like cash, the ability to own your own money. And while it wasn't really a good form of money at the time, there was not a lot you could do with it. It was extremely volatile, and there was no real merchant adoption. The potential was there for you to take those Bitcoins, put them on your phone, your hard drive, your laptop, and own your own money. Now, one of the things that I encourage newbies to this sector, and there's a lot of newbies that joined this year, is to actually appreciate that you can now own your own money. If you leave your Bitcoins at an exchange, that is legally the exchange's Bitcoin. If you leave your money at a wallet, which acts like a bank, like Coinbase, then that is legally Coinbase's money that they promise to repay you. If you left your money at Mt. Gox, as 70% of the entire ecosystem did in 2012, then they discovered that Mt. Gox owns that money. And so one of the things that I encourage everyone to learn over time is the power of actually owning your own money and learning how to earn your own money, getting a hardware wallet, using Bitcoin as it was originally designed to be used, because there's great power in owning your own money. The second force is because banks own the money when you deposit it with them, they also spend your money as they wish. And this is the root cause of the financial crisis. They take the deposit that you thought was your money, and they lend it to the least risky, highest return asset class they can find. What they always do around the world is they lend it for property speculation. So they allow everyone to take out a mortgage with your money because the mortgage and the house can't run away, and if you can't repay it, then they'll repossess the property. They consider that high return, low risk, and it's the only reason why property prices go up year after year, is because all of your money that you think is yours is being used to lend to people that want to buy property so that banks can charge interest on that loan. And this is what happens around the entire world, every financial system. The reason that property is people's favorite investment class is simply because banks are taking your money and lending it to people to buy property, and therefore that skews the markets towards the property. With Bitcoin, it's slightly different. Bitcoin, because you can own your own money, it means you can transfer it and send it to anybody else with no censorship and the ability to take it from your pocket into somebody else's pocket. And what Satoshi Nakamoto solved in that white paper was how you can do that without double spending. And that was the innovation of blockchain. That was the invention that came from here, how to solve the double spending problem. And this is what they were talking a lot about during these first things. So just to recap, two major differences. With the money that you at a bank, it's legally theirs. And when it's legally theirs, they spend it as they wish. With your Bitcoins, it's legally yours. And because it's legally yours, it comes with additional responsibilities to safeguard them, to look after them, but it also means you can spend it as you wish with anyone in the world that wants to participate with no identity, no requirement, no censorship, which is a major, major change in the world that we were looking forward to bringing. The third thing is why it's $15,000 today. And to understand this, you just need to have a bit of an appreciation for the economics behind Bitcoin. And once I've gone through this, I'll go through the 5 investment waves that came as a result of giving people the ability to own their own money, spend their own money, and understand the economics. So with your traditional money, the way that it works is many people think that governments create it. Governments don't create it. They create this. They create these pieces of paper. But that accounts for about 3% of the money in the economy. 97% of the money was invented by private banks, and they already invented digital currency. Bitcoin did not invent digital currency. Bitcoin invented digital currency that you can own and spend independent of a central bank or any government authority. And that was the innovation. Banks already invented digital currency. To understand how this, what you think the government created, ends up in your online banking, you have to understand how it's actually created. And the way it's created is every time they issue a loan, they create a brand new deposit. What that means is that every time you log into your online banking, if you have a positive balance, then somebody else had to borrow that money for it to exist. Everybody with a positive balance means that somebody else has a negative balance and are in debt, which means that all digital fiat, all digital currency that was created and backed by, is created by a private bank, but backed by a government, is actually somebody else's debt. That's how it comes into existence. So traditional money, traditional digital currency is backed by debt, and because it's backed by debt, it means that it has risk inherent in it. And because it has risk, the government has to guarantee the system. But the challenge is that most governments around the world do not actually have the solvency to back that up. The only reason the US has that solvency is because it's the world reserve digital currency of the world. Okay? And so then you have to look at what Bitcoin came to be. Well, Bitcoin took that concept and tried to make a different form of economics, a different form of money supply. And what it said is that we're going to create a completely fixed money supply. There will only be 21 million Bitcoins, and that will all there will ever be. And that means as long as the demand for those Bitcoins becomes more useful, and ever since 2011, the reason it's been the highest performing asset class in the world for 7 of the last 8 years is simply because the demand for those Bitcoins has gone up every time the technology innovates. And it's new demand from different user cases that come from all around the world. And some people use it as a commodity. Other people use it as an investment. Others use it as a currency. Others use it where censorship on money exists. Some people use it as technology. Others use it as protocol. It's why if you put 5 people in the room to argue what Bitcoin is, no regulator, no government, and no individual user will agree, because Bitcoin is so many things to so many different people, and it does not fit in the box of what people are used to. It's a completely new asset class, a new technology, a new invention, a new innovation, and from that, every single year, people discover new things that they could do with it that they didn't know before. Now, not only is the money supply fixed, it also has a very clear economic policy of how Bitcoins are created. With traditional money, the government decides what is right for the local economy. And this is not an attack on governments, because that is exactly what they should do. The challenge is, if you hold your savings in traditional money, then what the government wants to do for the economy might work against what you want to do as an individual. For example, the government on the macro level, they have to create new jobs, they have to create economic prosperity, and they have to make sure that you don't save your money. They don't want you to save it because they want you to spend it. And therefore, they use monetary policy in order to increase and decrease the supply, and they use interest rates in order to stimulate and unstimulate the economy, and that makes for good money for spending, but very bad money for saving. And most people are saving their money in the currency that was created by the government, that they thought was created by the government, but is actually the digital currency created by the private banking sector that's backed by debt, that's backed by a government that's insolvent, that might not necessarily have your best interest for your savings. And that is what Bitcoin came along and gave a new monetary policy whereby you could opt out of your local government policy on their currency. That is why it's such a controversial subject. Essentially, the way that the Bitcoin economics works, and this will be the last thing and before we go through some of the investment trends, is that every 4 years, the amount of Bitcoins released into the economy every 10 minutes halves. What that means is when I went to that first conference, there was 50 Bitcoins created every 10 minutes. And it was given to people that were performing the role of the bank. They were auditing every transaction. They were running expensive computer machinery. And they were expending money in order to receive these new Bitcoins. And every 10 minutes, 50 of them got created. And then 4 years later, 25 of them got created every 25 minutes. And then 4 years after that, 12 and a half of them get created. And by 2020, it will be 6.25. And the supply eventually diminishes until no more Bitcoins get created. What this means is that there is, as long as the demand for these Bitcoins outstrips the supply, then over the long term, you create what's known as a deflationary currency. Now, deflationary is counterintuitive to what most people might think. Deflationary means that the purchasing power of the money that you own allows you to buy more goods. Traditional currencies are inflationary. By inflationary, what it means is that the supply always increases, And if you hold your savings in traditional currency, then you have to work harder and add to its supply in order to keep up with inflation. And if you just don't add to it, then your purchasing power goes down over time and you can afford less goods, traditional currency. But that has a very good user case. That user case is it has stable money that you can spend in your local economy, but it's very bad for savings. Very bad for savings. Whereas Bitcoin did the opposite. Bitcoin is not very useful for local spending, because if I go and, it's like a foreign currency to everybody. If I go and buy a loaf of bread, that loaf of bread could be worth twice or half as much in the current markets. That doesn't make for a great median of exchange. But what it does make for is a continual long-term upward pressure on price as long as the demand for it and the utility increases. And so when people ask me, are we in a bubble? We might be in a short-term bubble, but Bitcoin is still the most undervalued asset class that exists. Way back in 2011, everybody was telling me when Bitcoin hit $1 that this is too late, I've missed the boat, it's too expensive.
Simon, sorry, you have 2 minutes left.
Sorry?
You have 2 minutes left, just reminding you.
2 minutes?
Yeah.
Okay.
Sorry.
All right, well, let's go through the waves. Okay, my slide changer doesn't seem to be working. If someone knows how to do it manually, I'll go to the next slide.
Please, can
anyone change the slide?
Can anyone change the slide? Можете применить слайд?
Can you change the slide, please? We have some technical issues.
There we
Спасибо.
go. There we go. So very quickly, I got a bit too excited about Bitcoin. I'll be giving another presentation on the main stage at about, thank you very much. I think I'm on at 7 o'clock or 7:30 on the main stage, and I'll continue this topic as well, going into due diligence on how you make investments in this sector. But I was very fortunate enough to be invited to that Bitcoin conference. Bitcoin became the core asset class. Bitcoin became the benchmark for determining. Bitcoin became this deflationary asset class where utility continued to increase every year. And then loads of people started copying Bitcoin, and they started creating scams and all sorts of stuff. They started creating technological innovation. They started to create all sorts of things where they tried to replicate the properties of Bitcoin and change something slightly. Some of those stuck, many of those disappeared. But it created an opportunity for people to be more speculative with a percentage of their Bitcoin. So if you hold Bitcoin as the core reserve cryptocurrency, digital gold, and you want to get more speculative, then people can take some of these altcoins and get exponentially greater or lose your Bitcoins a lot faster. But that created another wave that came along through altcoins. The second one, which I missed out, was I was fortunate to start investing in the sector. I've now got equity in approximately 100 different companies in the sector, from some of the most valuable companies like Bitfinex, Bitstamp, Kraken, BitPay, BitPayzer, UnoCoin, exchanges all around the world. It was another wave, essentially. It follows the same rules as venture capital investing. Make 100 investments and 10 of them might go on to become unicorns. The next thing that came along after equity was ICOs and tokens. So we invested in the very first ICO, which was one called Mastercoin, which essentially tried to take Bitcoin and turn it into what Ethereum later became. And then some of the other ones, which are trying to decentralize the internet and different applications like Storage and MadeSafe. And then eventually one of the most successful ICOs we invested in, and I'm not telling you about the losers, there was a lot of losers along the way. I'm cherry picking some of the successful ones, was Ethereum. Now the Ethereum ICO, after about 2 years of development and them almost going bankrupt because Bitcoin hit a bear market, and by the way, some of you have not experienced a bear market. We're going to discover when the bear market comes, and it will come, how strong your hands are and how much you believe in this technology. Because I remember in 2013 when there was a year and a half, almost 2-year bear market, where everyone was telling us that this is a scam, it's a Ponzi scheme. I told you so. I encourage everyone to understand the economics and get through those skepticisms that many people will throw at you.
Simon, you have like 1 minute left.
Okay, last minute. And that led to ICOs and tokens and the economy that we're in right now. So with ICOs and tokens, I'll go through how I assess them, how we assess them at banktothefuture.com in the other presentation. And the final thing, the final bonus, there was a question earlier for the last talk from the Binance guy about hard forks. I want you to reassess what these hard forks are. Hard forks are a dividend and a reward for holding Bitcoin. I received 50% dividend yield just by the people that were disagreeing about the future of Bitcoin. They split, you get free coins, and you get double the supply, and then you get investment in another innovation. So I don't see that as a scam. I see that as technological progress, a great investment that's not only producing ultra-high capital gains and returns, but now is also producing income with other tokens. So the final thing I wanted to end in was a little project that we're working on right now at Bank to the Future. So because we own equity in some of the most valuable companies in the sector, we've invested 200 million since 2015. We've now got all the licenses to take all this equity, tokenize it, and allow people to trade some of the most valuable companies in the sector. So while ICOs are coming along and circumventing regulations, which I think is an important innovation as well, in a regulated environment, you'll be able to actually not pretend it's not equity, but actually invest in the equity via tokens with all the benefit of what happens with cryptocurrency. So we're very excited about bringing that to market, and Bloomberg just announced that, and that's set to launch next year. I don't know if that's all my time, or do I have time for questions, or is it the next talk?
Yes, you now have time for Q&A, sorry.
Okay, thank you for pushing me along, because I can talk a lot.
Okay.
Okay, who would
so
like
first
to
we will-
ask a question?
We will ask from the mobile app, and then we will give to the audience.
Okay.
Simon, please. Yeah. First question is from the app. Mining is acquiring a lot of electro energy, and will it lead in the future to collapse of energy system?
So Bitcoin consumes a tremendous amount of energy by design. Proof of work is the only proven thing that can give the security that we need. There's no doubt that both Ethereum and Bitcoin are powered by the same type of proof of work and energy because the economic incentives completely work. Somebody might come along and innovate something further, but my guess is the second that Ethereum goes off proof of work, and sorry if this is a bit technical, but it's a technical question, then they're going to find a big split in the community, and I think the most valuable chain will be the one that has proof of work, because proof of stake has just proven that the people that were in there from the beginning, the rich get richer, it causes more centralization, and it means the people voting on the future of the technology are the same people. Bitcoin works. The reason we had a 3-year debate about scaling is because the miners are independent of the developers are independent of the users, and while we have pockets of centralization, Bitcoin is the only decentralized thing that exists out there today.
Okay, thank you. Now we will take the question from the audience, please.
Добрый день.
Good afternoon. Can you share with us, please? Good afternoon once again. Can you tell us, please, what are top 5 most promising altcoins, and probably some tokens which you think are also promising and which you are studying?
You name 5 the most prospective altcoins, in your opinion.
It's a very dangerous question to ask. The reason I don't like asking that is because people will follow what I say, and that's a lot of responsibility that I don't like. What I can tell you is that the only thing that I have a good degree of comfort in is Bitcoin. And then in terms of Bitcoin, Bitcoin has challenges. One of those is privacy, and any altcoin that's addressing that privacy issue has created a different user case. So I invested in both Monero and Zcash. I think Bitcoin has some governance challenge. I haven't seen any other coin that's come along and done governance that works, but other coins have an opportunity there to figure out some of the governance issues. And then you have scalability, obviously. The interesting thing with the ones that claim they're more scalable technology is you only know if it's scalable when as many people are using it as use Bitcoin. So be very skeptical of anyone that tells you they can solve privacy, scalability, and governance, because Bitcoin has the most talented, most talented, experienced developers in the world. And it's not that these other people know something they don't. It's that Bitcoin knows something that they don't, and that's what it's like to be at the top and at scale.
Thank you. And now we will take a question from my biolab. Do you really believe that 100% pump in Bitcoin price for less than 3 weeks has something common with fundamental and economic reasons?
Firstly, fundamental analysis only works in the long term. The fundamentals of Bitcoin are crystal clear. It has a fixed money supply, and it gets more useful every year. There's been 16,000 of them mined. I guess 16 million of them. I guess 6 million of them have been lost, and there's only 10 million of these things around. There is an absolute scarcity and a huge desire and need to own Bitcoin, because it's the only digital asset class that you can own, send, and that's why the value's going up. Short-term, technicals, anybody's guess. I stopped trading Bitcoin a long time ago because I'd been a market maker. I was on the markets, and I know for a fact 90% of traders lose their money and feed the 10%. Those 10% that are making money out of trading are insiders. The exchanges, the miners, the insiders, the investors that are in the inner circle. If you're not in the inner circle, I believe you have no business trading. And you will most likely, if you might figure out a way around it. But the easiest strategy, buy a hold, play the economics. Every time the government comes along and tries to ban it, you get a big correction, buy those dips, and just hold and accumulate. It's stress-free, it pays dividends, you get hard forks, you don't have to pay any transaction fees, and guess what? The richest people on our platform on Bank to the Future were the same people that made an investment, logged in 2 years later, and realized how much their portfolio was worth. The people that aren't rich, that were there, I know people that were there in 2011 at the very same conference. They were trading like crazy, and they're still not rich in one of the biggest boom markets that's ever existed for a long time. And that's because they traded. So that's my encouragement, and I don't have a self-interest in that because I'm a shareholder in many of the largest exchanges in this industry. It's probably not the right thing to say, but it's the right thing to do, in my opinion.
Thank you so much, Simon. Last question from the mobile app. Just following this one, what do you think will be the maximum cost of Bitcoins, and what is your prediction for 2018?
Even 1 year time frame, I don't make predictions. Bitcoin is my savings account. Bitcoin is not an investment to me. Bitcoin is, I have a choice. Many people ask me, when are you going to cash in Bitcoin? And I'll say, when are you going to cash in fiat? Because I don't see it as, oh, here's real money, and then I invest in this, and I might get more real money. I see it as, if I cash it in, it means that I have to exchange deflationary money for inflationary money. Now, there's only one reason why I would exchange deflationary money for inflationary money, and that's simply because I might need to pay the rent or pay off the mortgage or buy the house or do the day-to-day expenditure. So my strategy has always been hold savings in deflationary money and have as least inflationary money as you need for your day-to-day expenditure as stable money. So where is Bitcoin going? And it's the same answer that I gave in 2011. Bitcoin is either multiple of $1 million or zero because it failed. There's no in between. If Bitcoin achieves its goal as a digital gold, as a store of value, as censorship resistance money that you can own, that you can spend, every single mistake that governments make, whether the government of India makes cash illegal, whether the government of Cyprus decides to bail in all your money, whether the government of Greece decides to make ATM cash withdrawals illegal, whether China makes exchanges and makes black market bitcoins better, whether Donald Trump becomes president and says to Mexico some bad things that crash their currency and destroy their wealth. Whatever happens, Bitcoin is an uncorrelated asset. Every fund manager in the world, even if they don't believe in Bitcoin, has to have it in their portfolio because it's the only one that won't go down with the property crash, that won't go down with the stock market crash, that won't go down with the bond market crash, because it's a flight and an exit from dissatisfaction with how people are treating the national currencies. And that is valuable whether you believe it or not, and that will become more valuable each year. The reason it's reached the highs it is today is because the hedge fund managers are all signing up for accounts. Wall Street is just discovering it, but they don't have the regulations, but they're investing in their personal accounts, and it's a flight to money because Bitcoin does what JP Morgan charges billions of dollars to high net worth people all around the world to shelter their assets, and Bitcoin does it for free. Thank you.
Thank you so much. Maybe we can...
Oh, sorry, I do have 2 more questions apparently.
Okay, we will take 2 questions from the audience. Okay, please. Yeah.
Thank you very much for the presentation. Many American investors call Bitcoin a bubble, including Carl Icahn, one of the most famous investors in America. They say that what is behind Bitcoin? So when I deposit my money into bank, the bank have obligation, well, to pay me this money back, sometimes with percent, sometimes with no.
They do have it in their terms, but they're allowed to bail in and take that money should they choose.
Nevertheless, they have some kind of obligation for me. When I invest money into Bitcoin, what is behind it? So I have no obligation and I have no money.
Bitcoin is backed by maths and code, and that maths and code has been audited by hundreds of thousands of people expending billions and billions of dollars in order to mine these things, where every transaction is audited by hundreds and thousands of computers that cannot rig the system unless they simultaneously gain control of 50% of the most distributed network and simultaneously spend billions of dollars to take the network down for 10 minutes, which is statistically and physically impossible to do today. It is backed by maths and code that works. It cannot be changed. It cannot be, no matter what anyone wants to do, those things cannot change unless you have the consensus of the network. But I ask you, what is the money in your pocket backed by? Absolutely nothing other than an insolvent government that promises that they will repay it if the banks take some economic risk with those funds.
Yeah, right.
It used to be backed by gold. What's gold backed by? It's just trust. Bitcoin, any type of money, is backed by trust. By you believing that if I take this money, it will buy me goods in the future, and that's it.
Is it right that under Bitcoin is just my hope that somebody will buy that Bitcoin from me? So
Every single market is exactly the same. The stock market, the bond market, every single financial market, commodities, is your belief that somebody will value that asset in the future and have a use for it. It puts together buyers and sellers. It's the same thing for US dollars. The reason US dollars is a useful currency is because there's more people in the world that are willing to take those US dollars and believe that they could buy something for it in the future. Exactly the same as Bitcoin. There's nothing new here other than the monetary policy and the fact that there's no government, no censorship, and no central bank that can change whims based upon satisfying the domestic macroeconomics of that country. Bitcoin does not care what color your skin is. Bitcoin does not care where you were born. Bitcoin does not care about your sexual preference. Bitcoin only cares about mass and code, and you can trust that the mass and code won't change unless the community says it so. Thank you.
Thank you so much. I think the time is up. Thank you again, Simon.